All right, let's bring in Gene Munster, Deepwater. He is the managing partner there, and of course, he's a fast money friend. Gene, what's your take here?
Melissa, I think they missed on the pressure point, of course, but I think the stock reaction is an overreaction. And ultimately, I think that this speaks to how sensitive investors are just for any little blink. I think, Karen, you were talking about this, just any fracturing. There's 12 metrics, kind of key metrics that come out in this quarter. They beat on 11 of the 12, and they missed on the Intelligent Cloud by 1%. And I think that this reaction, it is, again, deja vu relative to what we saw with Google.
That's what it's all about, though, Gene. That's the only thing the only thing they missed on is the only thing the market cares about.
All that makes sense. But at the end of the day, I think this is the reaction tonight. We're going to get guidance in a little bit. That's going to have a huge impact. The street's looking for a slight deceleration from, call it, 15.5% to 14.5% next year. And so that's going to be an important piece to this. But at the end of the day, I think the piece that really jumps out to me is this CapEx number. I mean, this is a really good sign for the AI trade. And these big companies, they cannot afford to take their foot off the accelerator when it comes to this investment. And ultimately, I think Dan mentioned that NVIDIA is now up in the after hours. That makes sense. I see this as most encouraging. So understand the near-term reaction. People focused on that Azure number. But I think the AI trade is still in lockstep and in a good position.
And Gene, so it's Tim. Thanks for joining. Certainly, Microsoft has somewhat unique embedded AI solutions. But what I think we're talking about here is a margin hit, at least in the short run. Can you talk about that? Because again, we can say it's the cost of doing business. But at some point, it really is something that could indicate that there's competition and there's dynamics around the valuation.
So near term, the stock's going to move. Long term in margins too. I would say this is that I'm confident that as they continue to increase their spend in the near term, that margins are going to be under pressure. I think that is a safe bet, and you're seeing some of that in the stock. I am also confident that this investment will pay off, and ultimately, I think that this is going to lead to higher, if not highest, margins that Microsoft has seen. And so I don't know what that period is, if it's a 1-year investment period, if it's a year and a half. I think by 2026, we're going to start to really reap the benefits. Last night, we talked about the timing of this contribution from Copilot. It's going to take time. And ultimately, I think that this is the right, even if it's at the cost of near-term margins, it's absolutely the right thing. If they don't make this investment, they won't be Microsoft. It won't be a $3 trillion company. It will be $1 trillion. They got to do it, and I think it's going to be good for margins long term.
Gene, it's Karen. Thanks for being on today. Do you think we will get more granularity on the call about Copilot? Or, one of the giant questions out there is monetization of the AI spend.
It's definitely going to come up, and I think that they will probably give a metric. I think this is something they'll probably give some indication on it and probably conclude with that we're starting to build, and that next year is probably the year where they're going to start to see it. So that's going to be another factor here, along with guidance as far as how this contribution is. So I do expect them to say something on that topic.